Hey, welcome back, Coin Engineers, for another video.
I don't ever slow up, no I don't take shit. I got no love for the fakeness. If you wanna play tough and wanna hate this, I'll always show up.
Today, I want to give you a simple system for navigating the financial markets, whether you're interested in the short-term opportunities of trading or the long-term strategy of investing. I will cover the essentials of both and show you how to use them effectively. Make sure to stick around until the end of the video, where we will bring all of this together and give you one super simple system that can be universally applied in all of the financial markets. For this system to work effectively, a trading journal with a pen and a piece of paper is a must. Any type of trading journal, you can use a piece of paper. This is a must. If you guys don't have one, make sure to get one. You can digitize your notes later if you wanted to put it into some sort of Excel sheet or anything like that. But in the beginning, I strongly advise you guys to use a physical pen and a piece of paper. So I'm going to give you guys now in a second some questions to ask to yourself, where I want you to fill these questions and answer them in your trading journal. The important thing is not to lie to yourself and be as clear and detailed as possible when you're answering these questions, because these are the principles for trading or investing. And I'll explain later in the video why these questions are so important. And at the end, I'm going to give you the exact system to differentiate trading versus investing, because those two are not the same. Okay, so let's start with the first question. What is a realistic time capacity that you think you can spend on this? Like we said, please be realistic when you're coming with an approach, and give yourself a clear timeline in your journal that you think you are willing to spend on this. The second question is, what is your budget? And remember, only trade with money that you can afford to lose. I will talk about this one a little bit more, and I will give you guys a system to make this very easy for you, so you know exactly how much money you need to spend to get started. So the third question is, what type of a person are you? Are you disciplined and self-organized, or are you a slave to your emotions? So I want you to basically scale your self-discipline from 1 to 10 and be very honest with yourself. Okay, so now the fourth question will be, what is your goal? Why are you here? And please don't just say, I want to make money. You need to have an approachable target that you can actually get to. Like, for example, I want to make $10,000 is an approachable target because you can actually get to it. But I want to make money is not an approachable target. You can make money for the rest of your life. Even saying I want to turn trading into a profitable job, that is an approachable target because you can metrize and track your results and your P&L over time. And lastly, guys, I want you to ask yourself, why am I here? Am I here to trade or am I here to invest? Because they are not the same things. Yes, you can do both, but trading requires more time, while investing requires money and lots of patience. So make your pick and don't mix up any trading and investing accounts if you choose to do both. And guys, I am going to later give you guys a system to create a business model with this where you can do both. Okay, the reason I'm asking these questions is to figure out if you're going to be a trader or an investor. If you answer these simple questions on your journal, this will help you decide if you're a trader or an investor. I will show you exactly how to do that in this video. The biggest misconception is confusing investing with trading and not having a system that is consistent with a working strategy. Unlike investing, trading requires more time. As a trader, you should have an expiry date with clear price points. So if your trade doesn't work out, you aren't risking too many bullets, because we always get new information in this market. When Bitcoin's price reaches a critical point, for example, what we call points of control, no one knows where the market will go. Think of it as a tug of war in this zone with bids and offers pulling against each other. There is another variable here, and that is the market maker's involvement. They can step in at any point to push the price in a certain direction. Imagine the market maker as an outside force in this tug of war, coming in with big volume to help their chosen team bids or the offers. That team then has more power to win. The market maker's decision depends on how deep their pockets are, how much risk they're in, at the current price, if they have too many longs, for example, they might start to consider opening some short positions as a hedge against their longs. Some of the other factors for their decision can include market sentiment, the general trend, and people's liquidation and stop loss point. I want you to understand that there is no certainty in this market. No one can know where the market is headed, not even the market maker themselves. This is why they hedge their positions, just to be safe. Now, I want you to pay attention to our first mistake over here, which is hopium. The best you can do is try to understand and analyze the market maker's moves to swim with the whales. Remember, trading isn't about learning a million different strategies or becoming a genius to understand every market maker move. It's about finding a working method, using one solid strategy that suits you, and following a system based on mathematical probabilities for a positive P&L over time. The best traders apply these principles and keep their strategies short and simple. Which brings me to my second and third most common mistakes, which are unrealistic expectations and overtrading. People expect too much in this market. They get a coin that they have done zero research on, and they get into it because they think the price will go up. But eventually the trade starts going against them. Trading isn't about guessing what price it will go next. It's more about hedging your risks properly and having a system and a strategy that works for you. Don't think opening too many trades or having unrealistic expectations that you'll become a millionaire overnight. One of the other things I want to talk about is before you buy a coin, please do your own research. This is the fourth mistake I want to talk about. Because most people usually hear a coin from someone, they don't do enough research to understand what this coin does, but they only do the thorough research when the coin is down so that they can feed themselves what I call hopium. And the last but not least, the most obvious one is emotional trading. You have to be like a robot. Here's an example to really drive this home. Imagine hunting in the wilderness with only 30 bullets and a full auto gun. You're alone, and to survive against bears and wildlife, you must preserve all your bullets. That's what trading is like. Your bullets are your margin, and you need to use them wisely, with a consistent system to survive in a place of wild bears and bulls. Every time you use a bullet, have a reason, some confluence, and a checklist. And write it down in your journal before the trade, so you don't forget you took it for a valid, logical reason. It's better to take a loss than to second guess your system. So please follow through, and until you learn how to actually trade, please do not play with money you can't afford to lose. Okay, now we have covered most of the trading principles. Let's talk about investing. Most people, without realizing it, become long-term investors when they initially wanted to be traders. Bro, I mean, how often do you find yourself in a trade where you have kept it open for 2 weeks because you have been trapped? You initially planned a small profit, but now you're a long-term investor and believer in the project as you add more money, and you're thinking to yourself, it's okay, it will go up, and you're wasting more and more of your bullet. Because no one can predict what will happen in the future. You could have things like FTX collapse and Luna collapse in this market. Nobody knows what the future holds. The best you can do is play with probabilities, have a consistent system, and follow through your strategy. Over here, I want to show you guys what types of investing you can do. One of the ways of investing is value investing. And the way that we do that is we find companies or projects that we think are undervalued based on past companies that have been similar. To understand this, you have to know your niche and stick to it and not be all over the place when you're doing research. The second investing strategy is growth investing, where you find a company with potential for the future. Examples for this could be Nvidia or Apple, as these companies have value and have potential to go further, especially Nvidia, which doesn't really have a proper competitor within the market. The third type will be income investing. This is more like your 401k. Just think about it. What is a 401k? Most people's 401ks are put into stocks like the QQQ, NASDAQ, periodically with their wages. This is how the 401 companies ensure a profitable outcome so your money doesn't lose value as a fiat currency over the years. You ensure a profitable outcome because you periodically bought at an average price. This is what we call dollar cost averaging, or DCA. You have bought the lows, you have bought the tops, now your average entry point is somewhere within the medians, which means 10 years from today, during another economic crisis, when assets go parabolic due to a fiat currency inflationary future, you can take advantage and be safe. This is how most people get early retirement. Basically, the more of your paycheck you put aside and invest, the earlier you can get to retirement. So I want to give you guys a conclusion here and then walk you through trading versus investing, and you can write it down in your journal and understand what type of a person you are and decide whether you want to be a trader or an investor. I will continue to teach you this system to properly trade or invest so that you can be educated and do this on your own. So let's talk about a 401k, for example. Investing speeds up your time to retirement. If you have a 401k, you're already on your way. But to retire faster than the standard 30 to 50 years, you need to systematically invest more of your paycheck. Retiring in 5 years requires a big chunk of your paycheck. Ideally, 20 years is a more realistic target. Realistic goals tend to have outcomes. If you feed yourself dreams, you're only going to set yourself up for disappointment because there are so many unknown factors in this world with infinite possibilities. But if you want to retire faster, that will come with extra risks, including not only preserving from your time, but also preserving your funds and needs to get to your goal faster, with the additional risk that you may not get there as fast as you hope. It may take 30 years, so you need to be really sure that you're going to be dedicating this 30 years. Ideally, because of fiat currency's futures, however, in 20 or 30 years, assets should be worth more because your fiat currency definitely will not. I want to quickly talk about the trading versus investing points. Once you find yourself, you can come over here, look at this chart, and understand whether you're a trader or an investor. Time commitment wise, trading is going to require more of your time. You will need to make sure that you are watching critical zones. You're going to have to watch the charts at least daily, if not weekly, and decide what kind of a trader you are. We'll talk about some of the trading styles in the upcoming videos. There are different trading styles that people can apply. I will give you those as well in the sheet. Let's talk about investing time commitment wise. You don't need to spend as much time. You just need to research what you're buying into. Once you know what assets you're playing with, all you have to do is allocate a portion of your paycheck, just like your 401k. When it comes to the skill sets that you need for trading, you need to be able to make rapid decisions, quick executions, and most importantly, you need to have a lot of patience and discipline. Remember, when it comes to trading, the risk factor is much higher, so I want to make sure that you guys are not starting with a huge capital, especially if you're a beginner and you don't know what you're doing, and definitely stay away from leverage. Only place spot positions or demo accounts, and make sure to use a tiny amount to start out with that you feel comfortable with, because trading is more like a muscle memory. I want you guys to get used to winning here. In order to do this, you really have to change yourself. To be profitable in trading, that starts with you. It really doesn't matter if you know a million strategies. What really helps you here is being disciplined, taking out all the emotions, and following through your system. Okay, thank you guys so much for watching this video. Please don't forget to like and subscribe if you found this content useful so the algorithm can take this video to more people. And please leave in the comments if you have any questions. In the next video, I will show you guys how to create a system to do both trading and investing, and to bring both together to have some sort of a business model. I'm going to make a playlist for you guys and go through very simple steps and make trading and investing very simple for you. In the upcoming videos, I'm also going to cover some of the best strategies that I have found personally that tends to work for me, but you can use this system to find your own strategies. I believe everybody's checklist should be specific to themselves. I think the first step is for you to get to know yourself, get used to trading first, and understand if you're a trader or an investor.